Good morning, good afternoon, or good evening, because I'm really good at what I do, but I don't have any idea what time you're watching this video. I greet you as such. My name is Tim Richards. As many of you know, I run the My Options Club, My Options Trading Club, 32 trades. I used to run Aim High Profits, which is what created what we're doing here. And what I'm showing you here is a chart of the SPX year to date. Looking here at the very start of the year where we opened up at 47.4520 and where we currently are as of Friday, having hit 58.22 on the 2-year anniversary today, October 13th, of the bottom, the big bottom that happened in 2022 after a 27+% sell-off. So this is a chart that some people see. This is the chart that other people see. Very much looking at it, trying to count where you are in your Elliott waves, and this is the chart that we see because this is what we use on an intraday zoomed in time frame to look and trade where we are. So enough with that. And where I'm going with this today is I'm looking completely only focusing on discussing credit spreads and do they work? Are they for you? The 0 DTE credit spreads. Everybody's enthralled by them. They all want to be involved. They've all seen hundreds of different methods and videos that are out there on how to trade this stuff. And I'll explain it now. You know, having been the operator of My Options Trading Club, 32 trades, and it all came from Aim High Profits. And what you see scrolling here just on some artwork from a couple years ago, these are the kind of trades that were typical, normal. April 22, QQQ 330 put 7,400%. You know, here is SPX 4255 calls, 500%, 400%, 400%, 300%. And it all came from Aim High Profits. Aim High Profits was a site I started back in 2012 with my partner to do research on penny stocks and find the good penny stocks that were out there to trade, find the scams, notify the scams, and know that if you are trading a scam, even though it can be a good runner, it's a scam. So, you know, don't get bagged. This is an article from 2016. Amazon 750 puts $365 to $9,600 in 2,900% in under an hour. And this was a trade that we did after Amazon had reported earnings the night prior. Entry 33 cents. Went to $10. That was the exit. $2,900%. However, just an hour later, they ran 9,500%, almost 10,000% on the trade. This is what was expected of me, was that kind of trade. They all wanted those types of trades. And again, show you just on the artwork from prior to dedicating ourselves or myself to spreads, still doing single leg calls and puts, but dedicating to the spreads. These returns are the kind of returns that people wanted and people expected. And when it started becoming that 200, 300, 500%, nobody was interested anymore because they wanted those 1,000% trades. And the reason being is because they were all pikers with tiny little accounts that were gambling. I got fed up with it and I decided to go with the adults, and the adults being those who understand, know, and respect the power of credit spreads. So I bring you on to the year to date. This is our spreadsheet that we follow. We follow the SPX as well. We track it daily. This helps us to be able to do the trades that we do. And just running you here from the year to date start down to the bottom. As you can see, we've got various 400% trades, 60s, 100%, couple of 150s, more 400s there, few 200s. But what you see here in red are trades that didn't work out, and the suggestion at the time was to roll the trade, if not taking on the loss. The loss being, this being a $2 roll, it's a $3 risk for a $2 credit, so you'd be taking a $3 loss or $300 per contract on that roll. And even though, like here, these 51.55, 51.50, the roll, $3.50 roll did work, what I've done for this, kind of visualization, call it whatever you want to do, here's a series of fails in a row trying to, top the market back in mid-October, August. And I just kept getting run over. $3 credit, $3.50 credit, $3.75, $4. We went from September the 3rd, where I thought we would bounce, getting a $4 credit on the bullish put credit spread that didn't work. We went from September the 3rd until Tuesday, October the 8th, where even though there was a dedicated message that we should expect a plus 1% day, I didn't believe that it would happen. I didn't think it would happen, and we still wound up doing it. I did not think prior to us opening we would get it. So that $3 credit did not work, and you all had your dates that are members of where to roll to. So anyway, semantics. Where I'm at here is I'm looking at this in a dollar value point of view. And where I'm looking at this as I'm scrolling up is you got the win, you got the win. All right. And again, here on this, I am completely wrong. Come back onto not that, but here, $2 is 67%, and your $2.50 being 100%. Over here, this was a 233% trade with a 50% trade. And we come back on here because, again, the numbers are wrong. A little bit better than $1.50 over here, and a little bit better or accurate to $3.50 over here. So call it $1.50 and $3.50 in credit. And we go over here and we fix that, and we turn that into $500. I'm pretty sure that's the only one that was not correct as far as it goes. And anyway, the numbers, how they work out, when I come over here onto the loss and a 1 for one trade in the loss column, where I'm going with this is taking a complete and total loss on the trade. Complete and total loss. These a little bit different because these were trades that we were told take the trade off. These were not rolls. The rolls are the ones that I'm talking about where they did not work. We had to take the trade off. $2.50 credit, $2.50 loss. $4 credit, dollar loss. As we scroll on down, and we get to where we are in October, doing one contract, taking the full loss on the trades that didn't work, you'd be up $38,490, 7,698%. We've issued 217 alerts in the year. We have completed 197 trading sessions on the year. So the win ratio is 84.33%. Not perfect. Don't have 100% win ratio. 84.33% win ratio, 15.67% loss. 183 wins, 34 losses. But again, this number here, 38,490, represents you being perfect. And what I mean perfect is perfect with these trades that are posted and recorded on the spreadsheet of having been the best trade that we were able to provide on that specific date. So let's say you were only half as good on those trades, but you still absorbed a complete and total loss on these losses. You'd be up $16,400 on the year doing only one contract alone. 2 contracts, 3 contracts, 4 contracts, 5 contracts, the numbers are there. And again, these numbers are based on only being half as good, but still taking on the full loss. So again, I run through this as not calling it a strategy for something that somebody should or could shift over to, but I bring it into you as a record of 0 DTE credit spreads work. And when I'm going to put out an alert on these, I have to be confident that a person who has a job and cannot monitor the market has a high probability of getting full credit. I have to have a lot of conviction that when I'm putting out a trade on these, a guy can't do day trades. His account size isn't large enough. So this trade has to work out because he can't do a day trade. So where I'm leaving with this here is the numbers are there. There's an old saying that liars can figure, but figures don't lie. I'm doing this long enough and trying to get everybody to go over and put those red X's into your day, into your week as they complete, as you start getting to the edge of when, I just lost a good friend yesterday. I had no idea that that was going to occur. But as you get into the weeks of your life and the years of your life and you start putting these red X's, knowing that you don't really have that many weeks that are left. If you're going to put your head down and you're going to get into the zero DTE credit spreads, trust me when I tell you, trying to time everything perfectly and trying to have a track record where you have zero losses, you're never ever going to be in a trade that's going to go against you, which I will show you here as an example on September 11th. September 11th, the day when we sold off, right after the open, 54.95.52, the open on, or the close on September 10th, we opened up 1 point higher and sold off. The trade I was in was the 5500, 5505 bullish puts because I saw us going up on that day. We went all the way down to 5406.96. Did I worry? No. Where did we close? We closed at 55.54.13 plus 50 points above the short leg. 900% trade. So I really don't even know where the message is that I'm trying to deliver on this, other than the fact that the numbers are there. If you're new to zero DTE, this will kind of help you. If you are seasoned, like many of you in the room are, that's the reason why these guys are making $30,000, $40,000, $80,000, $120,000 a day. Not every day, but on various days. It's there. It's there for you, and it's all a question of, do you want it?